Hey, thanks for tuning in. We're going to take a really quick look at the last month's real estate information here in Louisville for June 2017. That's also coincidentally through 2 quarters of the year, 2017. Inventory seems to be on the rise a bit as we go into the peak selling season. That's not a huge surprise. Summertime is always the peak selling season. Folks have kids and kids are out of school, and that's kind of when the moving takes place. So we can see, however, that we're still nowhere near where we were at last year, just as far as the sheer number of houses available for sale. I know this starts to sound like a broken record, but that continues to push the average sold price up, and here we are clearly above $200K for our average sale price. Maybe the highlight won't pop up there, but we're at about $227K for average sale price. There, you can see it right there. That is pretty hefty. I mean, I never thought I would see an average sale price above $200K several years ago, but that's where we're at now. So take that for what it's worth. Last but not least, we'll wrap this up by taking a look at the average days on the market. Just continues to plummet as we go into the peak selling season. Man, if a home is priced right and it's in good condition, it is going to sell quickly. And if your home is not, if you have a home listed and it is not selling quickly or at all, then chances are it's one of those two things. Pretty simple. Price tag in relation to the condition it's in. Okay. I want to shift over to a project that I've been wanting to work on for several years now, and that is taking a look at real estate history over the last 20 years. Okay, so as we shift over here, let's take a quick look at what I'm presenting you, and then I'll go over in detail some charts that I think are very valuable if you are an information hound like myself. So I took it upon myself to collect data from the MLS over the last 20 years. You can see here going back to January 98 on a monthly basis. And I wanted to see the number of monthly sales, the monthly sales volume, the average sale price, and the average cumulative or continual days on market. Because while it's handy to, keep tabs on the real estate market on a monthly basis, it doesn't mean as much if you never zoom back out and take a good look at the 30,000 foot view, which I'm able to do here in chart format. Okay, as an investor once said on a video I was watching, I can tell you anything you need to know about a market in 10 seconds by taking a look at a chart. And so without further ado, I'm really excited to present to you the last 20 years worth of data on some of these various data points, and we're going to try and glean some information that I think can be really helpful. So our first chart here is the number of monthly sales. On our left axis here, I guess our y-axis, vertical axis, we've got the number of single-family houses that have sold on a monthly basis ongoing for the last 20 years, going back to January 98 through June 2017 was our most recent set of data, and we've got that displayed out here on this trend line. So a couple things to glean from this. Number one, you can see that there's no question that the summer months sell far better than the winter months. Okay, now of course there's the flip side of that coin. If you have to sell your home in the winter time, there is less competition. So as long as your home is priced right and it's in good condition, certainly if we add to that fact, we switch back over here to our days on market, which is low, and our absorption rate, which is very low. That means people are snatching up houses quickly when they come on the market if they are priced right and in good condition. You still should be able to sell your home relatively quickly. Okay, with that sort of wind at your backside. The other thing I want to take a look at here is, can we predict, so to speak, or can we at least keep our eyes on the fact when market trend lines, when the big trend line changes? Okay, in other words, can we predict these economic crashes, so to speak, in our own backyard? So, of course, the last known horrible recession that we all have in the back of our mind was 2008, 9, and 10, when the average number of units being sold just plummeted and fell off like a lead balloon. Well, I would argue with you that it is not the high water mark that we need to pay attention to as much. Rather, it is the low mark. You can see here, if I pause the video and draw a trend line, which I will here in just a second, we had for about a 5 or 6 year period, the low mark kept getting higher. Okay, so every winter, the number of houses that were being sold was getting higher than the year before. Okay, which you can see here on this mark, and I'll draw a quick trend line just for reference. Okay, so you can again see where this red line indicates that the low marks kept getting higher, and once that low mark crossed over this trend line right here, January 08, perhaps even sooner, December 07, we were being told that something was amiss, that the tide was moving back out, and now we get to see who is wearing clothes or not, as Warren Buffett says. And by golly, when that tide went out and that trend line was broken, there were some major problems in the real estate market. And if you were buying properties, you were a hot commodity. The sellers were no longer the hot commodity. The buyers were hot commodity. And if you were like myself and you were snatching up rental properties, you had an opportunity to make, a lot of money in a short amount of time, because over the next couple of years, as those low marks were still lower than the previous several years, that was a real opportunity to snatch up some bargains. So again, if we keep our eyes on this trend line here, I'll draw another line for us. Okay, we can see here again that the low points are getting higher. That means the market is rising, and that's kind of what my message has been over the last year that I've been doing these videos. So everything so far looks to be fairly healthy. We may have a bit of stagnation here as inventory just, quite frankly, gets gobbled up. The number of units sold for our peak here, June, we'll see what it's like again in July or August. But if we don't match these highs, that may not necessarily be a bad thing. But if we come into the low season, January, February of 2018, or at any point, and this trend line is broken, and this trend resembles what we saw back here going into 2008, that's when our ears want to perk up. So and our eyes as well. Obviously, if you are looking to buy for value, if you are a value investor, now certainly is not the time, more than likely, because we are seeing these peak prices. If we go back to our average price tag, you can see that we're north of $227,000 now, going into the peak season. So those are some things to watch out for. If we scroll down here, we can see the monthly sales volume. Again, this is from a dollar standpoint on a monthly basis over the last 20 years. If you want to pause your video, this is what our long 20-year trend line looks like. And the message on this trend line is about the same, from a monthly sale standpoint as well. You can kind of see where that trend line broke going into 2008, and thus far the trend line continues to go up, and exceedingly so over these last several years. All right, let's take a look at average sale price, because here is a number that I really want to debunk. especially regarding the fact, or the myth rather, that I hear constantly, especially when markets tend to get frothy. All I hear from realtors and everybody else who wants to talk about real estate is that the average price tag doubles in Louisville every 10 years. Let's take a hard look at that and debunk that myth. Okay, as we look at this average sale price chart, this blue line represents, once again, over the last 20 years, what the average price tag of sold houses in Louisville has been doing. If we go back to the beginning, January 98, the average sale price was just over $145K. Therefore, if we went with the theory that every 10 years the average price tag doubled, then in 2008, January 2008 thereabouts, the price tag should have been on average about $300,000. As you can see, that was not the case. We didn't even crack $200K at its peak in June 2007. Okay, so I don't know what else to what else to tell folks, but to all the people out there who think that this is true, you're wrong. That's all there is to it. Even over the last 20 years, yes, we've had a great recession, but I mean, come on. During this 20-year period, if your theory was correct, we would go from 145, let's be generous and call it at or about 150. In 2008, we should be at 300. That means in 2017, our average price tag should be at $600,000. Now, there's just no way that is ever going to be the case. Property values on average tend to rise somewhere between 2 and 3% a year on average. Okay. Now, the other thing I want to point out is if you wanted to know where we stood on a long-term trend line, we are absolutely at the peak. We have never been higher than where we're at right now, the average price tag being just north of $227,000. Furthermore, the last point I want to make on this chart is that this little red dotted line that runs through this blue trend line is the average of the average, so to speak. And it's handy because we can tell that, for example, in the Great Recession, the average price tag was under the long-term trend line. Well, since the pendulum swings back and forth every so many years, you knew if you were to backtrack in 2004, 2005, 2006, if you were looking at this trend line, you knew that we were above the average trend line and that sooner or later things were going to correct and the pendulum would swing too far the other way, and bargains are to be had in this section right here. Conversely, now you can see where the blue trend line is at. We are squarely and firmly above long-term average sale price. So if you are selling a home, if you're a flipper, for example, now's a great time. You're in high cotton. If you're a real estate investor and you're looking to buy for value, now is the worst time to be buying. And again, we can glean that by looking at a simple chart. In 10 seconds, we know where we stand. And our last chart we're going to look at here is the average CDOM. That's continual days on market, or in other words, how long on average do properties sit on the market when they are listed before they go under contract. You can see, historically speaking, that the trend line is headed down. If we follow this red trend line, that's the average of the average. The blue line is the actual number, how that has been trending over the last 20 years. And once again, this trend line is really helpful because we can see right now over the last 5 years, we are way below average as far as this number goes from a long-term standpoint. And like our other charts that we just got done looking at, I think it's really helpful to look at these a couple of times a year to get a look at the 30,000-foot view, see where we stand, and see how those long-term trend lines are heading, and especially if they're breaking one way or another. That wraps up our video. I learned a lot. I hope you did too. Hope this helps you with your buying and selling decisions. If you have any comments or questions, feel free to reach out. Thanks for watching.